Good day, guys. So for today, we will have another topic, or simply a continuation of the process, of the counting cycle process. So far, we are done with the 6 steps, okay, included the worksheet, of course, and now we are down to preparing a financial statement or financial statement preparations. Okay, so I hope by this time you've fully grasped up the concepts of all the accounting processes that we've already prepared. Okay, this time we'll be preparing a financial statement or financial statements. Okay, so typically we have 6 financial statements, complete set of financial statements. Okay, so what are those financial statements? First, we have the statement of financial position, or what we call the balance sheet. Commonly we refer this one as balance sheet. Next is the income statement. We also have the statement of changes in owner's equity. Next we have statement of cash flows. The fifth one is the notes to financial statements. And lastly, statement of financial position at the beginning of the earliest comparative period. Okay, so for this last two, or the last set of financial statements, we will be having this one on the higher accounting, but this time we will be focusing on these three first. These three financial statements: the balance sheet, income statement, and statement of changes in our equity. And for the statement of cash flows, we will just have a quick uh, overview of what is a statement of cash flows. But as to preparation, we will go into details with this first three: financial statement, balance sheet, income statement, and statement of changes in owner's equity. Okay, so that's it. Okay, let's continue. Okay, so financial statements are the means by which the information accumulated and processed in financial accounting is periodically communicated to the user. So it is a presentation to be given to the users, as well as these reports or statements will be used by the users to make a sound decision. Okay, again, this financial information will be presented in financial statements so that the user can use it in making decisions. Okay, so the first thing that we have to prepare is first the income statement. So what is in the income statement is an information about the revenue of the company, as well as the expenses that the company incurred during a specific accounting period. So simply, simply saying, it represents the summary of all the revenues that the company gained and all the expenses that the entity incurred in a specific period. Okay? So how shall we compute the net income or losses? income or losses. So we just deduct all expenses from all revenues. Okay. So this income statement, um, it allows us or the users to evaluate the financial performance of the company. Okay? Take note, financial performance of the company. So how should we prepare an income statement? So the first thing you should do is gather the necessary information, of course. All those amounts that we need, we should gather those one. And if we have the worksheet already, it is easier for us to prepare the income statement because all the information that we need is can be found on our worksheet. Step 2, of course, don't forget the heading. The heading is the company name. Next is, of course, what is it? The what? This is the income statement. So the second line. And lastly, the date for the year, for the month, or whatever date that it should be, whatever accounting period it belongs. Okay, for the year ended December or for the month ended January, so depending. Okay, next is report all revenue accounts. So after having your heading, the next part is the revenue section. Okay, so you will put all the revenue here that the company has. Okay? For example, service income or whatever revenue the company rendered for that specific accounting period. Next is report all expense accounts. So after having the revenue here, of course you will total that one, total revenue. Then next is the expenses section. You will lay down all the expenses that the company incurred in that specific accounting period. And then you total again, report all expense. So again, heading, then revenue, then expense. And lastly, you compute the net income. So the last part is net income or loss. Because the company may gain or earn income or may incur loss. So pag mas dako sa revenue compare na expense, so that is income. However, if your expense or the company's expenses are a lot greater or exceeds the revenue, then it is a loss. So how you will come up this one? You will just deduct the expenses, the total amount of expenses from the total amount of revenues. Okay, so if you have 100,000 revenue, then for example, you have expenses 25,000. So our income or net income is 75,000. So for this amount, we should double rule this. Okay, so that's how we prepare the financials or the income statement. Heading, then the revenue section, then the expense section, then after having the revenue, total amount of revenue and expenses, you get the difference and find if it is an income or loss. Okay, so let's have an example. So this is an example performance for an income statement of a merchandising concern. You will know that it is a merchandising concern because you have this account title, cost of goods sold, okay? And then all the related expenses. Next is this one. This is a pro forma for a manufacturing concern. Okay, so we have different type of businesses. We have service concern, merchandising concern, manufacturing concern. As you can see, the nature of their business is different. That's why in preparing also the income statement, this there is part which is altered, but typically that is just revenue minus expenses, and you come up with the profit or the loss. Okay. So, nalang tayong mga additional information indicated on the financial statement or in the income statement of either of these uh, business types. So, merchandising concern, we have this what we call cost of goods sold. While sa manufacturing concern, we have this what we refer as manufacturing cost. Anyway, we will not be dealing with this yet. Again, this will be in higher accounting next semester. So we will be focusing here on our focus for this semester is to prepare an income statement or financial statements for a service concern. Okay? So service concern, of course, we have this one, revenue. And then last na nato tanang operating expense. Lay down all the list of the expenses. Then you total, okay? You total this one. So you have total operating expenses here. And then you deduct the total amount of operating expenses from the revenue. So we have an operating income here. Okay. So that's it. So let's go over to our example or a continuation of our games. So if you remember, this is still the case of Gray Electronic Repair Services. We've already done from journalizing, posting to the ledger account, and then preparing its unadjusted trail balance. And we have its adjusting entries here, assumed adjusting entries. And during our last discussion, our previous discussion, we prepared its worksheet. Okay, so as you can see in our worksheet, we have our income statement here. Okay, let me highlight this one. So we have an income statement column here. So this is the information needed for us to make our income statement. So therefore, we'll use these amounts in making our income statement. Okay, so actually, I've already made a pro forma for this. So let's have first, since na naman tayo information, we've already gathered the information from our worksheet. So let's make a heading for our income statement. So this is very electronic preparing services. Next line, what specific financial statement is this? So this is an income statement. Okay, next is for the year ended. So let's check. We'll just follow this one. December 31, 2019. Okay. So for the year ended, write the date, December 31, 2019. Okay. So the first part is the revenue. You lay down all the revenue. But based on our worksheet, okay, if a worksheet here, under the income statement section, in our worksheet, revenue is only the service revenue, and the rest were expenses. Okay, so we have already the amounts here, and we will just incorporate that one on our income statement. So we will just copy 9,850 as our revenue, and then we copy all the related expenses that we incur during that year. So we have here on our worksheet, the expenses that we incurred, 1,500, service revenue. Next, salaries expense, 3,500, taxes and licenses, 370. And for utilities and expense, we have 1,800, depreciation expense, 720, and service supplies expense 900. So we will just copy the account title and of course its related amounts. Okay, so that's what we've made here. Copy all the expense accounts and then its amount. And then with total its operating expense. So the total for all the expenses is 8,790. So in order for us to come up with a net income or loss, again, so 9,850 revenue minus the total operating expenses 8,790. So that's how we came up with 1,060. As you can see, the difference between the debit and credit here is also 1,060 because the difference reflects if it is income or loss. Okay? Again, may bawaan na nga income ni siya if the credit column of the income statement is higher compared to the debit column. So the difference connotes that there is a net income amounting to 1,060. Okay? Dapat ang imong net income diri sa worksheet, it should also be the net income on our financial statement or income statement. So here. Okay. So we can have this way of preparing income statement, and we can also have this one. So this is just the same. Ang kalahian lang nila is the alignment. As you can see, service revenue is more extended to the right side, and then the expenses, okay, nasa siya sa a little bit farther from the right side, okay. Hindi niya lang gapon din ang total nila, okay. The total amount itapad lang and aligned with the revenue para easier siya when you do the when you get the difference between the two. So, bali, lay down sa nato ang all amounts, the expenses, then beside the last portion of the expense, you put the total amount of all operating expense. 1,535 plus 370 plus 1,800 plus 720 plus 900. So the total amount for that is 8,790. So you can have this type of presentation for your income statement. So unlike this one, one line ra siya tanan, okay? You can also make this one wherein ang magkalinya revenue, total revenue, and the total operating expenses. And then still the same process, you you deduct the expenses from its revenue. Okay. So if you have done the income statement, the next financial statement, the next type of financial statement that we will prepare is the statement of changes in owner's equity. So it summarizes the items affecting the capital account of the sole proprietorship business. Okay, so take note, if we are using changes in owner's equity, it connotes that that is a sole proprietorship. Sole proprietorship meaning the business is owned by one person only. So what are those transactions that could affect our capital? So we have these four items. Okay, we have these four items are the owner's contribution, of course. Again, this owner's contribution could be the initial contribution, and also if na ay additional contribution si owner. Is it possible nga mo add og capital si owner? Of course, it is possible. Next is the withdrawal. Of course, withdraw si owner, so it could affect its capital and also the income and expense. But this one, it will be netted as net income or net loss. Okay, so generally, these are the items that could affect the capital. Owner's capital, the initial contribution, or we have also the additional contribution, the withdrawal, and then the net income or loss. For the income and expenses, because income minus expenses, of course, the amount is net income, or the amount we come up is net income or a net loss. So generally, the formula for this is capital beginning plus additional contribution plus net income or minus net loss. So, and then minus withdrawal. So, kaning net income dali, it could also be net loss minus net loss. Because the company may gain income or incurred loss. Okay? So how should we prepare the statement of changes in owner's equity? Of course, gather in necessary information, all the relevant amounts that we need. Next is start by making the heading. Of course, the heading, the company name, again, and then what specific financial statement is this? Of course, this is statement of changes in owner's equity. And then, of course, the last line is the date for the year ended. What specific accounting period is it? So you put beginning capital or capital beginning and then its amount. Next is if there is additional contribution, so add additional contribution. Next, net income. However, if it is net loss, of course, you will indicate here less net loss. So you will just see to it kung saan applicable, net income ba or net loss. Okay? Net loss, of course, that is deduction. And next is you also deduct the drawing. Drawing account, deduct. So that's how we came up with our capital and so capital beginning plus the additional contribution if there's any, and if the company earned income, so additional po na. However, if the company incurred loss, of course, you will deduct that one. And lastly, the drawing should be deducted also. And that's how you come up with the ending balance of the capital. Okay. So let's have an example. So you have here beginning capital 0. It was given. So next is additional investment 12.5, and then the net income. So come up with the total increase 12.5 plus 5 8 equal 3. And then if there's growing, you will deduct that one. Or net loss, you will also deduct that one. So you have the ending capital of 6,850. So this is an example. We have the heading here, beginning capital, and all the related items that we should add and items that we should deduct. And then we come up with the ending capital of the owner. Okay. So again, statement of changes in owner's equity presents a summary of the changes in capital. Okay? And what are those items that could affect the changes in capital? Those are the owner's investment, um, the profit or loss, and the withdrawal during that specific period. Okay, so let's make this statement on our example. Okay, so we have here, okay, so again, still we will be using our worksheet in preparing the statement of changes in owner secret. The first thing that we need to know or to make is the heading, that is gray electronic repairs and services. Next is, of course, what statement is this? Statement of changes in owner's equity. And then, what date? So let's just put here December 31, 2018. Okay. So Mr. Gray capital beginning, again, this is beginning by the way. Okay. So we have an amount of 13,200. So where did we get the amount of 13,200? We get that one from the unadjusted trial balance, 13,200. Okay. So our unadjusted trial balance, 13,200. So I put here 13,200 and then add, supposedly if there is additional investment, we put also that item, but since upon scanning the transaction, there's no additional investment, so we will directly consider na lang net income. Okay? The net income, of course, this information is from, it could be from the worksheet 1060, or It could be from from the income statement that the company indeed earned 1,060 pesos. Okay, so we put here 1,060. And then we have a subtotal 13,200 plus 1,060, 14,260. And then we deduct the drawing. So we just go over on our worksheet and find out how much is the drawing. Of course, this is 7,000. Okay, so 7,000, and then we deduct this one from the 14,260. Therefore, we came up with the ending capital balance amounting to 7,260. So how did we make it? So first we make the heading, and then if there is additional contribution, we should also indicate that one. But in this case, there's no additional contribution from the owner, so we just directly add the net income that we earned for this year. This net income amount is from the income statement or from the worksheet. You will both uh, the both source, you will see this amount 1,060, and then total, and then the deduction drawing, or if we have net loss, we should indicate that one also as a deduction from our capital. So after processing this information or financial information, then we came up with the ending capital balance amounting to 7,260. Okay, so that's it. So meaning at the end of the accounting periods, so this is 2019, meaning on December 31, 2019, the updated balance of the capital, great capital, is worth 7,260. Okay, so that's how we make or prepare statement of changes in owner's equity. And next is a statement of financial position. Okay, or the balance sheet. It shows the company's financial condition as of a certain date, of course. So financial condition is presented by reporting asset or how much the company owns, liabilities or how much the company owes, and its capital. Okay? So as you can see, asset, liability, and owner's equity is the financial element present in our accounting equation. So we'll just follow the asset, liability, owner's equity, the format in preparing our balance sheet. So, okay. So how should we prepare this one? First, again, we gather necessary information on all the relevant amounts. And again, heading again is the company name. Next, what is it? It's a financial statement. What specific financial statement it is? So we could put statement of financial position, or we could simply put balance sheet. Next is the date as of the, okay, whatever's the date, as of the year ended, or as of the month ended, or as of the quarter ended. So it depends what is the accounting period that the company applies. Next is the asset. So first part is asset section. So you put here all the asset accounts. So we have the current asset. So we put all the account titles here, and then the non-current assets. Account titles here. Okay. Next, after having company assets, you report all the liabilities. So liability section, So, same with the asset na pre-current ug non-current. Okay. Okay, don't forget to total the asset. Okay. Dapat na total asset. The same with the liability, na total liability. And then, we report the capital and take note the ending balance of the capital. So, we will have this amount on the statement of changes in owner's equity. So, we have the owner's capital section, pilay ending balance niya, okay? So, and then, after having this one, we also have the liab, total liabilities, and owner's equity. Meaning, we will add the liability and the owner's capital, okay? So, please take note that the asset amount or the total asset amount should always be equal to the total amount of the sum or the sum of the liabilities in owner's equity. The moment that your asset exceeded or lower, pwede, or simply dili equal ang asset amount with the total amount of liabilities in owner's equity, so it means there's something wrong with your financial information. Okay? Take note, the asset amount should always be equal to the total amount of the liabilities in owner's equity. Okay, so in preparing the statement of financial position, we have two formats. First is the account format, which look like this. The account format, as you can see, it shows like a key account. And naidiri ang asset section, and then the liabilities and owner's equity. Okay? So, pilay total amount sa asset should be equal to the total amount of the liabilities and equity. This amount should be equal. Okay? This is an account format. So, in the left side, we have the asset, all assets, while the right side, we have the liabilities in shareholders' equity or the liabilities and owner's capital. So we use owner's capital for sole proprietorship, while we use shareholders' equity if the company is a corporation, because generally a corporation is owned by the shareholders. Okay, the second format for the financial position is the report format. Okay, we call this one report format. You just lay down all the information vertically from the asset, a liability, and owner's equity. So vertically, you will see here all the related financial elements that are relevant for the preparation of a balance sheet. Okay, so we have here the current asset, you total the current asset, and then the non-current asset, and then total asset, of course. For the liability, current liability, long-term liability, or non-current liability, and then the total liabilities. And next, the owner's equity here. And then the last part is the total liability and owner's capital. So that is 350 plus 881. We came up with this amount, 1,231,000. So as you can see, the total asset, 1,231,000, is the same with the amount as of the total liabilities in owner's capital, also amounting to 1,231,000. Okay, so let's have an example. Continuing our illustration, Gray Company. Okay, so we have here on our worksheet Now, worksheet, of course, it lays down all the information that we need in preparing a balance sheet. We have here. So we'll just prepare our financial position using the information from our worksheet. Of course, the first thing that we should do is to, uh, after gathering all the information which can be found on our worksheet, we will create the heading Gray Electronics. This is the company name where service. Next is financial statement. What specific financial statement is it? This is statement of financial position. Next is the date as of the year ended December 31, 2019. As you can see, for the balance sheet, we are using as of, while for the income statement, we are using for the year. Because we're using as of, it connotes the accumulated amount of all these account titles under the balance sheet, while for the year ended, it connotes that for this year only. Okay? Meaning, pila tong revenue for this year, pila tong expense for this year. Well, the balance sheet as of, meaning after all those years operating, mauna ni ang nabilin nga cash, mauna ni nabilin nga accounts receivable. So that's it. That's the difference here. Okay, so for the asset, we have current section and the non-current section. We'll just go over in our worksheet and classify all these account titles. So we have cash amounting to 7,480, accounts receivable. We also have service supplies. So these particular account titles, these are current account titles. On the furnitures and pictures, this one amounting to 3,000. This is non-current asset or fixed asset. Okay? And service equipment, 16,000. So this is how we prepare our financial statement here. Just copy the account titles, which we classified as current asset and its related amount. And then we total the current asset. And for the non-current asset, we also copy that one here. We have furniture and pictures as well as service equipment, 3,000 and 16,000. So we put it here. And then we last accumulated depreciation. So if you remember, accumulated depreciation is a contra asset, so or a deduction. Therefore, it should be deducted on the asset section. And that is on the non-current asset section. So ilas lang nato diretso. Total amount of the fixed asset minus the accumulated depreciation. That's how we come up with 18,280. You will also prepare pag-specify sa company kung ahan ang accumulated depreciation na below. For example, it belongs to the accumulated depreciation furniture and fixtures. So, ilas mo siya sa 3,000. And for example, the accumulated depreciation belongs to service equipment. So, ilas mo siya sa 16,000 so that you can have the realizable amount or the depreciable amount of this fixed asset. But you may also do this wherein a total tanan fixed asset and accumulated depreciation is generally the total amount also. So again, after having the fixed asset amount or this furniture, furniture and fixtures and service equipment amounts, minusan lang nato siya dayon sa total amount sa tuang accumulated depreciation. Again, you may do this individually wherein each fixed asset nga account title have its related accumulated depreciation. It depends how the company recorded It's accumulated depreciation. Kaya pwede man gud like this, na gitotal na niya tanang amount. Bali, this is a general account title for the accumulated depreciation, but the company may also record that one per uh, fixed asset. So, specific dyan yung accumulated depreciation for furniture and fixtures. And we also have accumulated depreciation for service and equipment. That's why if you will prepare that one, meaning individually ang iyang pagka-record, ang imong preparation, it will be like this. So, like this. So, if you have furniture and fixtures nga mo, then minusan sa related depreciation na nga furniture and fixtures, the amount or the net amount, okay, butang lang po dira. And next, for the service equipment, then minusan na po siya sa yung related accumulated depreciation and then its net amount. Then you add all its net amount. That's how you come up with total non-current asset. Okay. So for example, we have 100,000. For example, lang we have 100,000 for furniture and fixtures, and for the accumulated depreciation for the furniture and fixtures, we have, for example, we also have 25,000. So you less that one. The net amount for furniture and fixtures is 75,000. Okay. So same with the service and equipment. For example, we also have this one 50,000, and then its related accumulated depreciation is 10,000. So our net amount for the service equipment, that is 40,000. Then you total the non-current asset, total that one. That is 75,000 plus 40,000. So our total non-current asset is 115,000. Okay. So again, this is done if the recording of accumulated depreciation is specific. Okay. Pag specific ang recording. But if the recording of the accumulated depreciation is general, meaning giusa na tanan, regardless kung unsa na siya nga property, so you may directly do the presentation like this. Okay? I-add nimo tanan, then less ang accumulated depreciation. Put the amount, so 3,000 plus 16,000 minus 720, we came up with an amount of 18,280. So therefore, our total non-current asset is 18,280. Then you total all the assets. So our asset is the current asset and as well as the non-current asset, meaning 11,780 plus 18,280. So our total asset is 30,060. So after having the asset section or reporting the asset, all the company's asset, we will report now the liabilities or how much the company owes. How much the company. Next is we will report the liabilities or the obligation of the company. We will still classify the current liability as well as the non-current liability. Okay, so we will go back in our worksheet and see to it what are those liabilities that the company owes. So we have accounts payable here, and we also have loans payable and the utilities payable. Okay, so that's how we use this worksheet. We go on the amounts under balance sheet and classify if ani siya nabilong nga financial element. So for this 13,200, this is capital as well as the drawing. This is also capital. Okay. So for 720, okay, this is a contra asset. And lastly, the utilities payable is a liability account. So you will just use and transfer the account title ng current liability as well as the account title ng non-current liability. So among the liabilities that we've identified, accounts payable and utilities payable are considered a current liability. So we will just copy the amount here. Accounts payable 9,000 and as well as the utilities payable 1,800. Okay, so it should be reflected in our liability section. So total current liability, we just add this two, we have 10,800. Next is for the non-current liability, we have the loans payable. So generally, loans payable is classified as non-current liability, 12,000. Okay. When you total the total non-current liabilities, of course, that is still 12,000 since we only have one one non-current liability. So we add all the total or all our liabilities. So we came up with this amount, 22,800, or simply total current liability 10,800 plus the total non-current liability, which is 12,000. Sorry, total liability is 32,800. And of course, the last part is the owner's equity. That is the capital account title. But take note, we'll be using the ending capital balance. That is very capital December 31, 2019. This one can be found on our statement of changes in owner's equity here. Okay, so 7,260. So we will use this one, 7,260. Okay. If you didn't prepare the statement of changes in owner's equity, you may use this worksheet. How shall we use this one? We simply process all the account titles related to the capital. So we have this one, the 13,200 capital amount, and then the drawing 7,000, and of course the difference nga 1,060. So you see the capital here, 13,200, minusan og drawing as 7,000, and then the net income or the difference of the debit and credit should be added to our capital. Okay? Take note, if loss ni siya, therefore, ang amount ani is nasa debit column. Okay? Pag nasa sa debit column, it means a deduction from our capital, just like the drawing. Pag nasa debit column, deduction from our capital account. Pag nasa credit column, kani, like this is an addition to our capital account. So 13,200 plus 1,060, okay, 13,200 plus 1,060 minus the drawing amounting to 7,000. So this is our ending capital balance, 7,260. So even though if dili pa ta maka-prepare sa statement of changes in owner's equity, by using the worksheet, we could still come up with the ending capital balance amounting to 7,260. So that is the amount here, 7,260. And then lastly, we total the liabilities and the owner's equity. So total liabilities 22,800 plus the owner's capital ending 7,260. So our amount is 30,060. So we double ruled this one, meaning it is equal to our total asset na still 30,060. Okay, so this is a report format of a statement of financial position. So generally what we did is we make the headings and then we'll lay down all the asset, classifying from current asset and non-current asset, and then we total all the assets. And then for the liabilities section, we also classify current liabilities and non-current liabilities and total all the liabilities. And then we owner we prepare the owner's equity, and specifically this is the ending balance of the capital. Take note, ending balance of the capital as of December 31, 2019. So is it if kaninga amount is not yet available, of course we will use the information from our worksheet in computing the capital balance of our capital. And lastly, we total the liability amount and the owner's equity nga balance. And that's how we prepare statement of financial position. So as you can see, if we already have this worksheet here, is it um, less hassle and much easier for us to prepare the financial statements, all those financial statements that we've tackled. Okay? So generally, the amounts and account title that we use are all found in this section's balance sheet for the balance sheet na financial statement, and as well as the income statement. Dili na po nato makita ang mga amounts and information that we need for preparing income statement. For the statement of changes in owner's equity, still you can find this one sa tuagyapong worksheet. Okay? So that's it, guys. As you can see, we've already finished the seventh step of the accounting process. Okay? An overview of the accounting cycle process. We're done with the journal entries or journalizing, posting to ledger accounts, and then preparing the unadjusted trial balance, having and adjusting entries or preparing adjusting entries at the end of the accounting period. And then we prepare the adjusted trial balance or the updated trial balance after incorporating all the adjustments. And then we prepare the worksheet here. So worksheet is the sixth step, but again, this is optional. The preparer may prepare this one or not, but again, it will be an aid for the bookkeeper or accountant to prepare the financial statements and the closing entries, as well as it is a way to check if you've made the correct entries or if there's any error on your preparation. So makitaan po na siya sa toong worksheet. Okay? How did you find out if na error? Of course, aside from dili mag-balance sa tong debit and credit column, the additional amount wherein the net income section or it could be net loss dapat equal atong i-add sa income statement section in the balance sheet section. Okay? So, though it is optional, it is really advisable to indeed create or prepare the worksheet first before preparing our financial statements. Okay? So, we've just finished the preparation for the financial statements, and the rest of the accounting cycle process will be discussed on our next meeting. Goodbye, guys.